Bruno, when we spoke to you about a month ago, you were looking forward to the earnings season, seeing it as somewhat of an eye-opener for investors at this point. What do you make of the message from the C-suite and whether investors should be picking up European assets at this stage?
Good morning. Well, I think that the earnings season clearly came in better than the expectations. Expectations had been very much foggy also within the companies themselves. So the investors themselves didn't really know what to expect, apart from it will be very, very bad. The bigger question now is, given that the companies and the sectors delivered what was expected, IT, pharma, utilities being the ones that still show positive earnings growth, all the rest going up to minus 50% earnings growth. I think the bigger question is what's next, and that's will of course depend a lot on the medical evolution and on the lockdowns that will take place in Europe.
Bruno, we've been talking a lot about playing the stimulus still, and one basket of stocks that comes to mind when we talk about that theme is retail. We saw in the United States last week that some big retail names were picked up, and there is a view now, you've got executive orders in the States. If that translates to some sort of deal between Democrats and Republicans, then it might be supportive for consumption habits in the States if there is more stimulus and these unemployment checks are being mailed out. Also in Europe when it comes to any further stimulus here in terms of the recovery fund. What do you make of retail stocks and just how you think the consumer is going to fare on the back of stimulus at this stage?
Well, I believe that so far the stimulus has really served the purpose of bridging the gap of loss of income and loss of revenue. So it's not really a stimulus, it's just bridging the gap of what is not there. Before the consumer goes back into consuming, and we shouldn't forget this was the first time ever that the consumer was locked down and was not allowed anymore to spend. So I think the retail stocks that will clearly benefit from this are the ones that have e-commerce capabilities. All the rest that has really the shops where people need to go in and there will be social distancing even in the near to mid-term, that will clearly not be the companies that will benefit from it. So I would remain very cautious as to which retail stock to buy.
All along in this crisis, Bruno, we've been talking about the potential for a second wave of infections. The United States clearly dealing with a fairly significant infection rate at this point. Here in Europe, it's been a little bit mixed with the travel season upon us. What do you make of how investors position around the data they're going to get with this second wave of infections?
Well, the second wave, according to specialists, is still to come in the autumn. The only way to avoid healthy individuals being locked down, like it was the case in March, is by either testing a lot and tracing a lot. And I don't think most countries are ready for that. So one can expect, again, some sort of lockdown and negative economic impact. It's clear that the shade of Corona is much longer than expected. So the GDP decline we saw just recently will need to be followed by a historic increase in GDP, but it remains to be seen whether the consumer will have enough appetite to support that. And that's really the trigger to the future.